Welcome back, traders and creators. In today's video, we're going to talk about the best time frame to trade Forex on and also explain the different time frames to you so that way you can understand what kind of a trader you need to be in order to be the most profitable. So let's first start into the hourly. So we have gold on the hourly time frame, and I'm going to shift between the hourly and lower time frames and kind of explain them to you. So in this box right here, we have a possible trade setup. Now I'm not going to go in depth on the trade setup, but I just want you guys to realize how much time it takes for this move to go and how many pips you possibly could have gotten it. So basically, to really break it down, if you haven't seen the other videos, this isn't going to make sense, but if you're interested in this trading strategy or style, definitely watch the other videos that we have on our channel. So basically, we have our retail stop losses. Those are taken out, market flies up, then we mitigate out, and then the market continues to go. So where you could have gotten into this trade is right around this area. Your stop loss could have been around, I would want to say, let's see. So your stop loss would have been around 100 pips, and then your take profit would have been around 317 pips. Now, for a lot of people, 100 pips stop loss seems like an insane amount, but really when you break it down, you're having a 3-to-1 risk to reward ratio, which is an amazing ratio for trading. Don't focus on how big or small your stop loss is. What really matters is that risk to reward ratio. But again, for some people, this is on the hourly time frame. This may have taken a little bit too long for some people, right? For this trade to play out, it would have taken around 16 hours, which isn't that much time. It's actually a very quick trade, but that's on the hourly time frame. Maybe people don't want to be sitting there with their trades in the market for 16 hours. So what you can do is become a trader on a smaller time frame. Now we are on the 30-minute time frame, and we can see that we have another trade setup, right? We have highs being taken out, manipulation, and what we have is the market come up, take out those retail stop losses, move in the downward direction, mitigate out, and then drop. And for this, you could have gotten into this trade and you probably would have had a smaller stop loss. Instead of a 100 pip stop loss, you can go into something like a 54 pip stop loss, and your take profit could have been around below these lows because you know they're about to get swept, and your take profit is 136. Your risk to reward ratio is 2.5. That's still a great risk to reward ratio, but in the time that it took for this market to move was definitely a lot quicker because this move took only about 2 hours. Now this doesn't happen all the time, but you just need to realize that on smaller time frames, you'll have more precise entries and the market is going to move a lot quicker. Now the last example that I have for you guys is on the 15-minute time frame. And by the end of this, I'm going to explain what time frame is best for you as a trader to get into. So what we have here is another example. Stop losses. Let me get rid of this box real quick. Stop losses are taken out by this wick, and then what happens is that the trade gets mitigated right here. The big sellers mitigate out, right? Stop losses taken, market moves, they mitigate out, and then the market makes the real move to the upside. Now, if you wanted to get into this trade, let's see what your risk to reward would be on this. Now remember, on the hourly time frame, you had the most pips. You had around 317 pips, but your stop loss was around 100 pips. On the 30-minute time frame, about a 50 pip stop loss with 130 pip take profit. Now for this, your stop loss is around 25 to 30 pips, and your take profit can be anywhere around 89 pips. So your stop loss is a lot smaller, but so is your take profit. But remember, the ultimate goal that we are shooting for is to get a risk to reward ratio. In my recommendation, anything above a 2.5 to 1, because that will allow you to be able to make mistakes in the markets and not be the best trader in the world, but still be profitable. So as we can see, the stop loss is a lot smaller, but so is the take profit. But this is the number we're really going for. Now let's see how long it took for this trade to play out. Once you were to get into this wick, you can see that the market played out in less than an hour. So your take profit would have hit in an hour. So let's really break this down. Now on the hourly time frame, that was a very quick setup, but you can see how that took 16 hours to play out. For some people, having their money in the markets that long may freak them out. So that is why you can jump on smaller time frames, still analyze the larger time frames because you want to know the direction of the market. But if you want to be in and out of trades in less than a couple hours or even minutes, then what's your ultimate goal? It's to trade on these smaller time frames so you can be in and out of these markets quicker. But you have to realize that you have smaller stop losses and take profits. But again, that number one number, the one that we're looking for, is that risk to reward ratio number. Anything above 2.5 to 1, that's just my personal recommendation. You can trade any way that you want, but the higher your risk to reward is, the less perfect you have to be in these markets. And these markets are unpredictable, so the more advantage you can give to yourself, the better. Now, you can do this on any time frame. You can be a swing trader, an intraday trader, and a scalper. It really doesn't matter what time frame you trade on as long as it fits your personality and your lifestyle. If you're someone that doesn't mind having your money in the markets for hours or even days or weeks, then trade on higher time frames. If you don't care about big stop losses and you really just care about making those big moves, higher time frames is the way to go. But if you're someone that's very impatient, maybe you have to switch to smaller time frames like the 15-minute or lower. So don't let people tell you what time frame is the best to trade on, because any time frame can make you a profitable trader. It's just making sure that you understand what time frame fits best with your lifestyle and your personality. If you guys enjoyed this video, make sure to leave some love on that YouTube and Instagram, and we'll see you in the next video.